Well, good weekend, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Friday, and we're on the 4th of February, 2022, just getting on to 7 p.m., so now I can go enjoy my weekend. You know, it's amazing. We hear all the talk about inflation. We see it. I'll give you an example. Prime. Do you have Prime? I have Prime. Thinks nothing of going yesterday and saying, hey, we're going to raise our prices from $119 to $139. So it's almost a 20% increase. I'm just giving you round figures here. And the rationale is they don't think many people will quit over that because their services are blah, 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 and blah, blah. They're probably right. So the stock today goes up dramatically, but it's the inflation scenario. I can go on and on. Food, beef, pork, chicken. I go to the store, I see still empty shelves. I went today, and we're buying some fresh food for tonight. Wanted to get actually some salmons, but I was looking at other things and going, it's even chicken. There's not as much as you think on the shelves. I was surprised as can be. And yet the prices, they're ratcheting up on everything. The president's aware of it. He knows that food is being gouged to the Americans by 4 large companies that the government allowed to happen. It's no different than when you allow even the exchanges. There's no board of trade. There's a Merck. They take over whatever the pricing. They declared today 11% growth. Why not? They're taking up the fees and kicking them up dramatically on everybody. Your fees went up just now at the Merck. Do you know that? On February 1st. So if you're trading, where else are you going to go? They're the biggest. But that's what happens when you allow the big boys to consume the smaller boys. I'm not knocking the Merck. It's called good business. And until America finds a better way of doing it, it's the way it's done, and they can keep delivering to their shareholders. Well, why isn't the gold going up on all that becomes the big question. And we'll have to wait and see. We know that the Ukraine situation is in the air. Nothing happening off of that. We keep reading the government reports. Wages going up 7%. You saw today's numbers. Market's not moving on it. It's not dropping on it, it's just not having any impact on it. It's almost like, oh, okay, so we can deal with that. When you look at a monthly bar chart of gold, you get the whole story. You realize the first time you fell back to the monthly chart, and I'll just show this to you. This is the 18-month moving average of closes. And you came down to challenge it right this here. You hit it this particular month. That was February of 2021. That's a year ago. What has the market done? It has hung at that number. And what's happening is you're narrowing in the Bollinger's bands more. That means this market's compressing for a move. Because it's a monthly chart, it's not like you can say on a daily chart, here it's going to happen right away being a week, whatever it is. Much harder to guess the time on that. So I go to the weekly chart and see if I can get any help there. The market has married itself on the weekly basis. I don't think you'd disagree with me. It right here, we haven't left it since this week, since October. You had a few weeks right here, admittedly, that you got under it. Then you came back and married yourself to it. But the overall picture, just watch it, is you're staying on those numbers. You get a little under it, a little over it. You haven't gone anywhere. That's the point I'm making. So the 1800 level, and you've heard me say it seems to be the number the market has trouble with, to the downside and the upside. It moves either side of that particular number. When we come to the daily bar, I hope you like the size of these bars. I've made them much bigger for you now. You see the action. Now I'll lift it up because let's go to the swing line. We have a higher high and a lower low pattern. We don't have a trend again. The market had a huge drop on a weekly basis this week right here, January 28th, when you went from 1854 to 1778.80. Now you're trading within that, which I'd expect. Where's neutrality? Duh. There's that 18-week moving average, and believe it or not, the 100s with it. It's hard to make anything out of it when you've got a chart like that. The boundaries, the upper Bollinger Band and lower, are the outer parameters where I'd expect resistance, support. Momentum is still drifting down. Bias is up because you're over the 18-week average. You talk about a mess of a chart, this is it. We then go to the gold-silver ratio, and you're knocking on the door of a breakout to the upside, which means silver loses to gold. And you see it on this chart, and that the silver market's got a lot of resistance here, but it's unable to keep pace with gold that is not doing great, but it's gaining more than the silver. In the copper market, do you see the sideways action? This is going to turn out to either be a big-time top or a big base for a move back to 550 or a move down to this level. Where it's the market's prepping you. That's the spinning of the market. No follow-through, one way or the other. If you disagree with me, great. But if you look at the chart, I'll make my argument and you'll have a hard time beating it. The platinum and palladium have tried to stay alive. You have on the longer term the higher lows, the higher highs. If you take out 991.10, a problem in the market. So what's the number the pros are going to defend? Probably this 999.5, that 18-week moving average of closes combined with the 100-week. If it gets under it, then they'll say, you can't make your move back up to the Bollinger Band. You're stuck in that sideways to possibly lower action. And I think it'll have a hell of a time trying to get under 929.70, the 200-day moving average of closes. That's a big number. In the dollar index, you witnessed a failure this week. Here's the market. Everybody was bullish the dollar January 28th. You don't think so? You got a newspaper? No? Okay. You got a computer? Go back and look at the news a week ago. I'm not asking much of you. This dollar's a powerhouse. It's going to go. Okay, go where? Because what happened is we saw a change. Number one, markets getting fearful that too many interest rate hikes will hurt the U.S. economy. Yeah, they're now talking an interest hike right now. There's probabilities from 34% to 100%, the lowest probability February of a year out. If you look at the Fed fund rate, 34% to the next two Fed meetings, 100% chance of the next two meetings having interest rate hikes. Now, there's obviously argument as to the size of the hikes, but that's what the market is built in. That is the fear the market has, that the Fed's going to have so many hikes to shut the economy down. Obviously, that's not the Fed's goal, but it only has two goals. It has a full employment goal, which it's hit, and it has an inflation goal, which it hasn't controlled. That's it. It's not to worry about the stock market. It's not to worry about anything else. That's their mandates. And that is all that they're empowered to do. So therefore, that's what the market got scared of. Now, why did currencies rally against it? Well, they're talking interest rate hikes, but not as aggressive as we are. And suddenly, even the Eurozone has joined into that. If you saw yesterday's conference with Miss Lagarde, there's a reason you went up 1.5 cents now in the euro currency. That's a huge move. And it all happened because their watershed event happened where the bill was done. They got the secret out. They're going to talk rate hikes this year. Originally, nothing this year. Now, the market will try to smooth it over, say, it could be September or later. We don't know what the data is going to look like. The cat's out of the bag. And the market's reacting to it and putting pressure on the dollar because of that. I discuss all this morning after morning for my traders. And I do it at 5:30 in the morning first because I want them by 6:15, 6:30 to have their hands on the charts as I'm seeing them, looking for the trade ideas. I cover first thing in the morning, what's the news out of Asia and Europe. We do a short news talk. What's coming out in the U.S. between 6:30 and typically 9 o'clock. I go through it all. Here's what they're looking for. Here's what you look at. Here's the chart setups to go with it. Then I move at 9 o'clock into the spiders because now I've got all the information on the futures. I can go to the ETFs and the spiders and say, they've already made their moves. Here's where you're at. Here's the things to do there based on that. I cover 40 charts on each one of these. I do it in lickety-split manner, but I do it in a way that let's assume you're just a metal trader. You don't want to see this. You slide the bar at the bottom. You go right into the metals. Say, hey, I want the energies. Just slide. If you want to watch it all, you can. And I do the same identical thing in the spiders, covering all these markets for it. Give you the same way to get through it. Does that make sense? So time goes quickly. You get the full analysis. And believe me, I'm not bashful. Buy here, sell there. This is what you do, how you do it. This is the stop on the trade. This is the profit objective. These are the add-ons, because most people don't know how to add on to trades. So I go through that with you. Go to our website, take a look under research, decide for yourself. I'm Ira Epstein. Have a great weekend.